Okay, good evening, everyone. It's August 14th, and it's 4:44 p.m. Pacific Time, 7:44 p.m. Eastern Time. And right now, what you see on my screen is the S&P futures. On the radar, you can see that the futures are currently trading slightly lower, negative 0.19%. Bitcoin is up 0.47. Nasdaq is down slightly 0.19, and Russell. So looking at the chart here, the S&P actually has rallied off of this wave 1, 2, 3 count. And it's looking like it's going to try to tap that 200-day moving average and then probably pull back on a wave 4. So this is a classic wave 135 setup. Didn't look at the structure before, but if you don't know what a wave 135 setup looks like, you can find the low here, and that's wave 1, and it was a choppy 2, where 2 terminated here at 3,723, and now we're off to wave 3, which is probably where the 200-day moving average is at 4,329-ish. Let me just make sure that's correct. Yeah, 4,323.72. Let's just say around here. And then wave 4 cannot enter into wave 1. So there is a potential that wave 4 could drop the market all the way to 3,957. And if it holds this level, then wave 5 would push it back to all-time new highs. Maybe you see there's resistance here, previous resistance zones, and then the last one would probably be the 52-week high. But let's just say, let's be conservative and say it's around here. Now, using the Fibonacci extension levels from wave 1 to 2, we can see that a potential wave 3 target could actually extend up to the 2.618, which is most likely the case, okay? Because there's actually no resistance between, well, the resistance is at the 200-day moving average, and then it could chop around there. But the next fib level target would be 2.618 at 4,453.25. And then that would maybe imply that an extended rally, which could potentially pull it back to an ET or retest the 200-day moving average, where maybe the 21-day moving average coincides with the 200. So that would probably take it to 4,317, where major support or resistance turns into major support. But if that major support doesn't hold, then the next target would be the 21-day moving average, which would be somewhere around the same level or a little bit lower. So I'll just assume this is the case, but the conservative approach would be to be assuming the wave 1 count, which is way down here at 3,960. So I guess if you're in the Michael Burry camp, and you think that the market is going to crash and continue moving lower, then you're looking for rejection either at the 200 or at the 2.618, and then that wave 4 would be the beginning of the leg down, okay? And that would probably take out the wave 1 here at 3,950. Okay, so this would be the conservative target, and that would be a good buying opportunity. But I would probably say that we're going to bounce right here into the midterm elections, and then wave 5 would take it up to 4,763. So if you're in the Tom Lee Fund Strat camp, or just generally bullish, then this is the wave count that you probably want to get. Okay, so that's, and then maybe new 52-week highs here. So if wave 3 is the longest wave, and we measure that using the fib extension levels, right, from wave, this is beginning of wave 1 to 3, then we pull it back to the beginning of wave 2. Then wave 3 could actually extend Sorry, is that, what did I just do there? I was measuring where I was just measuring the wave 3, and I'm assuming it to be here at wave, to be at 2.618. Okay, and then if it pulls back to wave 4, then the next target for wave 5 would be, if we're assuming a symmetry, then that would be 5,023. So how did I get that? And I don't know when that's going to be. Probably into the end of the year, like that, or even higher. So wave 5, the symmetry that I used using wave 3, because wave 3 is the longest. Okay, and I took that and measured a unit value of 1, so that would be 5,023, and I assumed that it's going to start at wherever wave 4 terminates. Okay, and then the length of wave 3 would take us up to from where the length of wave 3 projected to wave 4 would take us up to 5,023. I don't think it's going to go to a 1272 extension. So this is my best guess of where the market is going to rally into the end of the year. Now, the question is, does the S&P reject here at the 200-day moving average, or does it continue to push through and get rejected at the 2.618? 2.618 is would be my best guess, okay, as long as it continues to trade above the 6-day moving average. But once it reaches there, then we're going to be in a falling knife situation where wave 4 could possibly pull all the way back down to 3,970, okay? And that would be a very clean wave 1, 2, 3 count. So this is what I'm assuming. I'm actually assuming this at the moment. A rally up to 2.618, some pullback into wave 4, and then a massive rally into the end of the year, Christmas rally to new 52-week highs. And that's very similar to, consistent with the midterm election performance that I posted in the main chat room several times. For the Nasdaq, it's the same situation. So the Nasdaq has its eyes out for the 200-day moving average breakout, and it did have the wave 1, very similar structure with the S&P futures, wave 1, 2, and then choppy 3, right, all up to the 200-day moving average. And then, of course, if it pulls back, it'll pull back to stay above wave 1, and then wave 5 is, it could be making new 52-week highs. So I don't know what kind of, how this wave 4 is going to pull back. Is it going to pull back sideways? Is it going to pull back a little bit to retest the 200-day moving average? Maybe it goes through the 200-day moving average and retests the 200-day moving average like that, and then attempts to rally into the end of the year to a 52-week high, okay? Or it collapses and breaks through wave 1, right? Wave 1 will act like support, and then it breaks through and makes a new 52-week low. So that's what we're looking at right now. I want to bring our attention to Apple. So Apple's been doing pretty much trending pretty strong all the way from that bottom. It's made a pretty impressive rally of about 28%. That's a pretty big rally, and you can see it's been quite slow and steady, and the pullbacks are quite massive, and it's been taking out these gaps. But remember, it's left a lot of gaps open below. So these gaps look like they're, once this gap is taken out, it looks like Apple might end up taking out the gaps lower here. So it did have the wave 1, 2, and now we're at that 3. That's a very long wave 3. And now we're in a wave, once that gap here gets filled, then we're probably going to be in a wave 4, which would pull it all the way back to the 200-day moving average. So if Apple starts pulling back like this, I would say that the wave the wave 4 count in the S&P and the Nasdaq that I just showed could get pretty deep. Okay, so that, and then we get that wave 5 that starts to become maybe reasonably, I don't know, that we'll just have to wait to see how this pulls back. Okay, because that's a pretty big correction for Apple. It's about a 10% drop from after filling that gap. We'll see what happens. For Tesla, it looks like we have a cup and handle pattern again. So we did identify the last cup and handle pattern here. And then it moved up like 30% or 20% from the low here. 20%. And then now it's doing again the cup and handle pattern. And it looks like it's going to break out and try to tag, well, let's try to break out into the split. So let's use a Fibonacci retracement first. So that off of that low and to that high. You can see that it's pulled back at about 61.8, and it's been a choppy 61.8 as it's trying to break out. And then we'll use the Fibonacci extension to project our targets from this low right here. And it looks like a double top F935 could happen this week. And if it does start to rally into the split, that's August 25th, then a 1272 extension at 980 with a possible overshoot test of 1000 by August 25th is something that could happen. So I'll be looking to trade Tesla for the next 2 to 3 weeks. Amazon is right up against the 200-day moving average. If the market continues to trend, you can kind of see that it is kind of getting like resistance here. And if it rolls over, then we've got an ET to fill this gap right here at 139, and then try to fill the gap all the way down to 123. They're kind of moving opposite with the market. Like the market is ripping up higher, but Amazon is not really catching up with the market. So the gap is there, and there's a lot of gaps that could get filled. I would say the best time for it to get filled would be after this week, Wednesday or Wednesday. So watch out for Amazon. If it doesn't break out above the 200-day moving average at 145, then it's going to look like it's going to roll over and try to move toward the 21-day moving average. Boeing looks like it's trending, and it's going to probably pop this week. So it's got a gap here. If the markets stay bullish, then I think Boeing could pop up here at 176 to the 200-day moving average and then roll over. Google, you can clearly see the next moving average is the 200-day moving average, and using a fib extension, saying, let's just say, it's hard to say like what kind of wave count it is, but we can only assume a symmetry here. So let's just use this symmetrical move and project it here at the bottom. So it's kind of moved toward its 1272 extension already, and I'm assuming the next target is this 1618 at 125.97 with a possible retest of the 200-day moving average at 128. So I wouldn't really be aggressive to try to assume that 129 is the next moving average. I would assume the next few days it could get a little bit weak to retest, at least pull back to the 6-day moving average, and then try to make a move to 126 this week before Wednesday. Netflix has a big old gap to fill. I don't think it's going to fill this gap on its first attempt, but it could. It is trending above the 6-day moving average. And the 200-day moving average is way up here. That's like a 60% move. I don't think Netflix is really going to make a 60% move in 4 months. It is possible. I think this is a great setup for January, okay? Because January is the next Netflix earnings, and there might be some hopeism that pumps it into January. So the January monthlies for Netflix might be a good trade that I might position into slowly one contract at a time to build it up to about 10 to 20 contracts before the end of the year. NVIDIA also has a lot of room toward to run to the 200-day moving average with a gap fill. So it does look like this is a wave 1, 2, 3, and this is a 4, 1, 2, 3, 4, 5, and we're going into a corrective pattern with an earnings. I think NVIDIA is a little bit tough to trade with the earnings. That's on August 24th, if that's correct. So anyways, if this is going to continue to trend, which it looks like it is showing signs that it's trending because it's trading above the 6, I would assume that the next target would be the 200-day moving average after earnings. Roku has a wolf wave target of about, it looks like 200 by the end of the year, or by the end of probably next year. But in the short term, it does have a 100-day moving average at around $96 to 100. So I would, if there's a 70-minute TTM squeeze, I'm not too sure. No, it doesn't look like it. But it does have a wolf wave pattern. It could get a bit of a pop for the next 2 weeks up to 95. But it's still in a downtrend. It looks like it had several attempts to break through the 50-day moving average at 86, but it's not been able to get above that. So there's strong sellers here keeping price under $86 for Roku. Shopify is at $40.76. It filled the earnings gap back in May, and now it's pulled back, trading under the 100. And you can see where the 200 is way up here. That's huge in terms of return on your investment. But it doesn't like even though the S&P and the Nasdaq has made a tremendous attempt to move toward the 200-day moving average, Shopify and Roku has been trading under the 100. So that is a little bit of a concern when you look at relative strength between these components of the Nasdaq. We've already looked at Tesla, Facebook, same thing, very similar to Roku and Shopify. It's trading under the 100 when the Nasdaq and the S&P is trading toward its 200. Relative strength is weak, and there's a big old gap here, 169, that I tried to get filled last week, but it didn't happen. Microsoft, you can see, it kind of represents the whole entire tech sector, or as at least one of the strongest stocks in the market, along with Apple, and it's moving toward its 200-day moving average like Amazon did and like Apple did. Apple's above the 200-day moving average, so in terms of what Apple sees a bull market, whereas Microsoft and Amazon still regards this market as a bear market since it's trading under the 200. Crypto-related stocks like Monster and Coin, they're looking like it's it's rallied quite aggressively toward the 100, toward the 100-day moving average, and now it's looking like it's trying to continue that rally into the 200-day moving average at 416. If it gets there, I'm going to look to short it to get this gap fill at 328. But I'm going to wait for some sort of news to come out before I short it, because if I'm going to short something, I'm probably going to look to short it on an intraday time frame rather than a swing trade. Because unless there's like bad news, if there's bad news in the market and it's the narrative of the market forces. If there's no bad news, I'm not going to be swinging anything. I'm going to just kind of maintain a flat position each day and see if I can catch one of those big old gap up or gap downs, and look to fill those gaps. TTD had a huge move and she left a huge 30% gap. So this will take a while for the gap to fill, which means that it's just going to chop around 74 to 67. So maybe selling the 75 spreads, 75 calls would be a good idea. But that's only if you're into selling. All right, so that's pretty much what I see for the market this week. I think the market is going to continue to trade a little higher till Wednesday, and then we'll see what happens then. In the meantime, I'll be looking for gap reversal plays this week, not looking to swing, but I'm mainly focused on trading Tesla. All right, so thank you very much, and see you all tomorrow.